Hi friends, welcome to another video in our prediction series. In this video, I have got an advanced pattern formation and a counter trend trade opportunity for you. Let's analyze the first one, Ujjivan Financial Services. A bad pattern has formed on Ujjivan, and let me show you how to draw it. Before that, you should understand advanced patterns form mostly during consolidations. Advanced patterns form mostly during consolidations. A consolidation is a zigzag move within a zone without having any clear direction or trend. A consolidation is a zigzag move without any clear direction or trend. Keeping that in mind, let's look at this chart here. Okay, the stock price is in a downtrend. A retracement into the 0.618 level. This, I believe, is the 0.618, approximately. A retracement into a 0.618 level, pushed lower from there, breaking below this lower high, and once again pushing up into the 0.618 level. So if you draw lines connecting the end of each move, it looks something like this. What can you say of this? It's going nowhere. Am I correct? So this is consolidation, and we get advanced pattern opportunities in such sideways moves. Okay, so we have one such sideways move on Ujjivan, and that's why we have a bad pattern on Ujjivan Financial Services. Let's now see how it's drawn. Let's see how bad pattern is drawn on this chart. So before drawing the bad pattern, let me remove these from the chart. Okay, so let's now pick this tool here. This is our X to A leg, A to B leg, B to C leg, and the CD completion at 8, approximately at 886. This is how a bad pattern looks like. You don't have to worry. I will put out a video exclusively how to draw this advanced patterns later. Okay, so for the time being, let's focus on this bat pattern on Ujjivan. This is how a bat pattern looks like on Ujjivan. Now, do we have references to strengthen our trade? Let's find out. This is a possible ABCD pattern where this is our AB leg, the retracement BC leg, and the CD completion leg. So this is our possible ABCD. And secondly, although this candle closed above the most recent high, it didn't get a follow through. Although it closed above this most recent high, it didn't get a follow through. Rather, the next or the immediate candle was a bearish one, as you could see here. Okay, so that is another reference to support our assumption to go short on this trade. Next, Fibonacci confluence. Let's see if we have got any confluences. There isn't any decent enough Fibonacci confluence. There is no single point which is overlapping on another point. So to me, there aren't any Fibonacci confluences. Okay, so we have our pattern setup drawn and our partially good references in place. So let's now mark our first and second targets at the 0.382 and 0.618 retracement levels from A to D respectively. Okay, so for that, let's pick our retracement tool from A to D. This is our 0.382, which is our first target, and this is our 0.618, which is our second target. Let me change the color on these two. Green. Okay, fine. Now let's take this tool here. Imagine the market opens maybe here or maybe here in the next trading session. Our first target would be this, with a stop loss just above this level of strong resistance, and our second target would be this with a stop loss here. Okay, so let's see how this trade plays out in the next few trading sessions. Next on my list is Canara Bank. We have a trend continuation trade on Canara Bank. The stock is in a downtrend and haven't broken the pattern yet. Canara Bank is making a lower low and lower high, and this lower high here is not violated yet, which tells us the downtrend is still intact. Okay, so we now know the downtrend on Canara Bank is still intact. Next, how is the stock price behaving most recently? Let's see how is the stock price behaving most recently. To answer this, let's focus on this portion here. After making this downfall, Canara Bank is retracing back into some level of resistance. This is where we are going to look for shorting opportunities or initiate a sell trade. A zone or a level where we could get a possible meeting of two or more references should be good enough to consider a reversal zone from where we could place our trades. Let me explain or demonstrate how to do it. I want you to focus on this portion here. Focus on this portion here. Okay. We have an ABCD, our AB leg, retracement leg BC, and our CD completion. Let's mark the D completion on the CD leg with a line. Okay. Or let me expand this chart so that you could understand the concepts much more easier. So this is our decompletion point on this ABCD. Okay. Next, focus on this area. I want you to focus on this whole area here. We have another ABCD, and let's see where the D point terminates on this ABCD pattern. This is our AB leg. Let's take a clone. This is our BC retracement, and this would be our D completion point on the CD leg. So as you could see here, the D point completion on this ABCD is almost at the earlier D completion point. The D completion point of this ABCD is almost at the same point as that of the D completion point on this ABCD. Okay. Next, Fibonacci confluences. Let's see if we have anything convincing. Once again, focus your attention on this portion. Focus your attention on this portion which I have marked here. From this point to this point, back into this point, we get our Fibonacci levels, extension levels, and from this point to this point and back into this point, we get our next set of Fibonacci levels. As you could see here, there is a confluence of 1.618 and 1.414 and a confluence of 1.272 and 1.414. Let's draw a zone. Let's draw a zone at this confluence. Okay. Finally, let's take the retracement of this whole move and find where the 0.618 Fibonacci level lies. Retracement of this whole move, and 0.618 lies here. 0.618. Okay. The 0.618 level coincides with the top of a Fibonacci confluence zone. The 0.618 level coincides with the top of a Fibonacci confluence zone. Now, what can you conclude from what we have done here now? This we can take all these off and conclude this zone here is a pretty strong zone from where prices could reverse. This zone is a pretty strong zone from where the prices could reverse. We can initiate a trade when we get a lower low closing from this zone here. In such a scenario, our target would be this and our stop loss would be somewhere here, just above the immediate strong level of resistance. Assuming the market opens somewhere here in the next trading session. Okay, this would be our target area and this would be our stop loss area. But before placing a trade, we must make sure we get a lower low closing from this zone or from this level of resistance. Okay, so let's see how this trade plays out in the next, or how this setup plays out in the next few trading sessions.